Hi, this is Mark with your analysis for the week commencing the 7th of July 2013. Before we go into today's analysis, let's have a look back at last week as ever. First I'll start off with the easier trades and then I'll explain a few of the more complex things that happened last week. This was the Euro Yen, and I suggested last Sunday that I would either be looking for a pullback down to 12800 or a short at 13100, and this gave a perfect entry. Even on the daily, price had come up, touched it, fingers in the fire, and promptly moved back down a couple of hundred pips. So that was one of the easier ones. Similarly, the Euro Pound. I was showing you on Wednesday how I had just shorted the Euro Pound at 85.90. Why? Because this was a previous area of major support and resistance, and I'd been pointing out to you that price was basically bouncing in a range. And eventually, where did the move stop? It stopped to the pip on a trend line. So all behaved technically as to be expected. However, I then cautioned no euro trades on Thursday because of the ECB press conference. And that was just as well on this pair because price came up and raced through. Equally, I don't trade Fridays and I never trade NFP Fridays, and therefore you would have avoided a loss here. And this all comes down to the old patience and discipline. The Aussie dollar yen I showed you during the week, I would be interested to short at this 200 and the Bollinger. That one never happened. The real frustration of the week was the CAD. The CAD seems to annoy me more than most pairs. Last Sunday I had said I would be looking for a pullback to 1.0400. However, in Wednesday's update I pointed out that we didn't seem to be getting there, and therefore I was now going to look at this latest area of support and resistance, and I suggested an entry at 104.70. Price came down exactly to 104.70. However, because of the spread, I missed the damn thing by a fraction of a pip, and it went 150. So that was a real sickener. But this was NFP Friday anyway, so I would have been out of this trade. But I was looking for a long-term move on the CAD, and I'm going to show you in a moment what I'm looking for next. Then, other things that happened last week. The Euro USD. I had said on Wednesday that I would be looking for a close below 1.0300 and then a pullback and a short, and I actually took this on a 4-hour chart. So on the 4-hour chart I took it at 1.02995. I think I got filled, and here I was. My stop initially was up above this weekly 55 and daily 200, which was a major previous area of support and resistance in the past. And then I explained on Wednesday that with the ECB press conference coming out, I was going to move my stop to entry to protect the trade. So prior to the release, I had moved my stop down. I then moved it down to here, moved it down to entry. Bang, the news came out, took me out, and then promptly fell hundreds of pips, which is a real sickener. But again, it's all to do with the discipline. It could just as easily been positive news for the euro and come out and race the other way. However, on this occasion I got lucky with the pound. I was showing you on the pound during the week. In Wednesday's update I was explaining we hadn't had the pullback I wanted to 53.30, but I just keep fibbing and looking down the move. So on a 4-hour, now price broke out of an area, came up now to 53.30. Next obvious major line in the sand. It was also a fib on a 4-hour, and therefore I shorted, and this was filled just 52.90, and at no point really did this get into a losing situation, because again you start to drag your stop down behind it. We then had the new governor of the Bank of England came out and made a speech, and therefore I got my stop down here just above recent highs, and he came out with something that was negative for the pound, and on this occasion I managed to catch 200 and odd pips out of the pre-planned move. So the euro did not work in my favour, the pound did. Now the final thing here on this pound, I was saying that earlier in the week on Sunday, if price got down to 150, it would clearly struggle and I would look for a bounce. However, I told you, do not trade the interest rate news and never trade NFP Friday. And had you followed my advice, you would have not had a loser here, because this was all NFP related. Much better than anticipated US jobs news. Final things on the subject. This was the USD Swissy, and I was looking for a short at 9600. I explained if the euro started to crash, don't take it. And I also explained once again, do not take this on NFP Friday and had you done so and ignored my advice, you would have had a loser on this one. So it was a mixed week, but there were some big gains to be made if you followed the mantra of patience and discipline, particularly discipline when you have all this news coming out. On to this week's analysis. This then is the Euro USD on a monthly chart. Now this candle hasn't closed yet and therefore it's not valid, but we are seeing potentially the start of a very big move on this pair, and we have broken currently that trend line. And that trend line, the next main line we have here, this is the old head and shoulders pattern we were looking at weeks and weeks ago. And this is the old patience and discipline again. This is the head, this is the left shoulder, this is the right shoulder. You then measure from the head to the neckline, which is approximately 800 pips, which would spookily take us down to 120, which was the low this time last year. So what do we do? Well, the difficulty is at the moment we are right at the important area. Price came down on Friday, touched it almost to the pip, and that's where the thing has stopped. Therefore, what do you do? Well, if you're going to play the head and shoulders in a weekly move, what you do is you wait for a clear break and close below on a daily chart, pull back into 120,800 and a short. This could be a big move, and therefore it's important that we catch it. However, after such a big drop at the back end of last week, it's quite often we will perhaps see another bounce back up first. And to do that, you have to start thinking about going down to lower time frames. On a daily, we're at a double bottom, and we can see how important 120,800 has been in the past. And here on a 4 hour. So, ways to play this one. The ideal pullback, of course, for a short is all the way back to 130. Whether we would see that again or not, I do not know. In the short term, have a look at 120,800. If you start to see positive candles and indecision candles, probably best to wait till after the London Open on this one, then think about a counter trend long. And this is the kind of candlestick pattern arrangement I'm talking about on a 4 hour. That was for longing, this was for short. These are all indecision candles, spinning top, etc. So counter trend, it's more risky because the rest of the world is selling it. But as I said, after a big move, usually you get a pullback. So options are half stake, riskier trade long here. Look for the pullback anywhere along this trend line, so 129.50, or as the week advances coming down this area, and say the ideal would be 130. The other option, of course, is a breakout and the close below 128.800, followed by a pullback with a view to a short. And I would have a big stop for this one because I would hope to catch that 800 pip potential move. Dollar Swissy. Now the dollar Swissy on a weekly, we have broken a trend line I've had in place for ages. More importantly, we have broken the 200 EMA and 9600 whole number. But I prefer the euro this week. The Swissy is highly correlated and therefore goes in the opposite direction of the euro. 9600 is the main area. If you're going to take a long on this pair, then that would be the place to do it. As I say, I do prefer the euro this week. I generally trade the euro more and use the Swissy for correlation. But at this moment in time, if the euro starts to bounce back up again, I'd just leave it for a day or two, guys. Just wait and see. If we get a bigger breakout, then I would be more interested in the pullback. But this happened on Friday, and this was after NFP, and therefore I'm just a little bit wary with the Swissy. The British pound on a weekly chart, you have a double bottom scenario. This was caused by a statement by the new governor of the Bank of England, ex-Bank of Canada Governor Carey, and the reason was he is trying, it would appear, to weaken the British pound. So we've had a break of a weekly trend line, goes back to the beginning of the year, and therefore you could be interested for a pullback to all the way back up here. What I will be doing with this one, if we get a pullback to 150, I will short. If that loses, then that would be the next area in the sand. A very similar scenario to the euro. You now have the double situation here as well. Start looking for clues for a possible riskier bounce back up. Do not be in the pound and the euro and the Swissy at the same time. Just choose one of the pairs. Or you're looking for a clear break and close below 148.30, then a pullback for a short. Further clue that we might be on for a move back up, we have MACD divergence here as well. Same pair then on a daily chart. So as I say, your first line in the sand, pull back to 150 for a short, if not a break and close below 148.30. So let's say a close below 148.25 followed by a pullback, but preferred move would be a pullback all the way to 150. Once again, if you're trading it on a 4 hour, then watch this area here to see whether it's going to break or whether we're going to get a candlestick formation that suggests a change in direction, indecision, and move back up. The more conservative one is a pullback to 150 for the short. The euro yen, and euro yen we have a head and shoulders pattern similar to the weekly euro USD, and here, if you're new, this is the head of the movement, this is the left shoulder, and this is the right shoulder where we got that 200 pip move last week. The theory goes you measure the neckline, and I have taken for the neckline this line from mid-April along here, and you measure from the head and you measure to the neckline, which is roughly 900 pips. And the theory goes on this that if we get a break and a close of the neckline, that the move will then be reflected in a 900 odd pip move down, which spookily will take us down to the low in April. So there's not a lot in the way if we get a break and close below here. So for the head and shoulders pattern to work, the more aggressive entry is a break and close below 12800, but be mindful of the fact it may only go 40-50 pips to this point. The more conservative entry is wait for a break and close of this trend line. Counter trend, I would still be interested to short at 130-100 as per the previous week. If it breaks here, head and shoulders is still valid until we break the area of the head. But that is my preferred euro trade of the week. This is euro pound, and the euro pound we have broken after NFP. We have broken this 8600 area. In fact, let's have a look at this on a weekly chart. Now again, I'm going to be wary with this. I'm not going to take this as a long from its current position. What I am interested in, if we get a move up to around 8700 later in the week, I will actually be interested to short. This is a weekly trend line, and it goes back well back to 2008. So it is an important area, and it is also a monthly 200 EMA, and it's also been previous major support and resistance. So I will be interested in a counter trend short anywhere around 8700, 8690 area here. You could of course simply go for the long after a breakout, but it's not much of a break, and it was after NFP. What I would be preferring with this pair, if we get a pullback down to 8500 again, then I would want to long. Final option of course, and this really is a case of being flexible this week. It's an either or. If 8500 then loses and it breaks and closes below this area, then we start looking for shorts. So multiple opportunities on many of the pairs this week. Make a plan at the start of the week and write it down and say, if it does this, I will do this, and if it does that, I will do t'other. Dollar yen. Now the dollar yen broke 100, which is the major line in the sand. I have changed my fib slightly on this pair. This is a previous trend line, so we have got major resistance coming up. I will long this pair if it comes back down to 100. Aussie dollar yen simply drifting at the minute. It's gone absolutely nowhere last week. Upper Bollinger Band has softened a little. Might be interested still to short 9300, but I would watch it on a 4-hour chart. But as I say, the minute it's gone absolutely nowhere. The Aussie dollar has still continued to fall off a cliff. It's an absolute nonsense. They've got much better unemployment status than the US and a much better, healthier economy, and yet sentiment has changed against the Aussie dollar at the moment, and we're dropping and dropping and dropping. The more conservative thing with this is look for a pullback, and the pullback is a short at 9400. You may want to consider a bounce back up at 90, but counter trend trading, this has been very difficult in the last few weeks and not really very successful, but that is an option. Final option is if it clears 90. But it's just so stupid as this for me. I'm going to leave this unless we get the pullback. Final one, the dear old CAD. I showed you earlier, missed 100 odd pips with a movement by a fraction of a pip, which was a sickener. And explained last week we'd had a major break on this pair of this EMA that goes back years and years and years, and therefore that was the significance of it. I still need some kind of pullback. Friday's NFP, we have cleared 105.50. I'm looking more around 105.10. If we get a pullback and anywhere around 105.10, and I'm even going to put my stop 120 odd pips away down here below this monthly 55 EMA. And the reason being, if this continues to move, we have thousands of pips potentially that this could go. And so therefore, whilst everybody's forgotten about the huge US dollar mountain, debt mountain, and everybody suddenly seems to think that the dollar is the safe haven, which is ludicrous, then this technically has room to move many, many, many pips, and I want to catch it. If it continues to move up, I will revise my plan as the week continues, and so should you. That's it for the week ahead. Lots of opportunities, lots of potential choices and decisions that you need to make. But get in the habit of making your plan on a Sunday and writing down what you intend to do, and then of course follow the plan. The only thing that needs to then be added to the mix is check your calendars for news, because once again we have a lot of big news this week, and the US jobs news on Friday was positive and revised upwards from the previous month as well. So lots of reasons why the dollar may continue to rise in the short term. Have a good week.